Hey guys, welcome to another Trade Genius podcast. I'm a good friend Bob here, and we are going to dive into what the smart money and the dumb money is doing. I'll give you one guess what's going on. Let's dive in.
Trade Genius.
Bob, these
Hey,
charts are
everybody.
hilarious. We always make fun of, they always lure retail in at the very end, right? Kind of a classic textbook scenario. But yet here we are again at the market all-time highs, late business cycle, and they're all piling in again.
Yeah, and let's define smart money, dumb money, in case people think it's an intellectual thing. It's really, I would say, an access to information thing, and the ability to push the market in your direction. So smart money are insiders, big hedge funds, people that can actually move the market, and they've been for quite some time, Phil. They have been exiting this market. We've been talked about it, but at the same time, they create a narrative or a construct around the fact that things are going great and you have to be in the market, right? Just like a realtor, right? It's always a good time to sell your house or buy your house. And I think that's what we're seeing here, Phil. Look at this chart. It's amazing. Big money is selling to little money. We talked about this before. We can't have a market sell-off or a bear market without this happening. And it's happening. Now, to your point yesterday, we're going to do another podcast on scenarios, is that we still can have a blow-off top in this environment too. This is nothing for them. In fact, they would prefer a blow-off top so that they could be fully prepared for the short side. What do you think? Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yep, blue line is smart money positioning. Like you said, how that's classified. Here's the dumb money positioning. It's the exact opposite, right? Just climbing right into the move up. And this happens, every time, guys. This is by design that this happens. They want the smaller account holders to be holding the bag when they're done. And if you notice over time too, they've made it easier for the smaller account holders or dumb money to access the market. So the most recent thing was they waived all of the commissions, right, on stock trades. That's just to incentivize getting more of the small money liquidity in the system. So what does that leave us now? Well, as you mentioned, Bob, we have a double top and we have a scenario where we could either have a blow off or a bull trap, right? And so you had picked this out. I thought this was a good representation of where we're at. 2019, you had a double top and then you had the blow off move. So if this is what we're going to see, we would probably see the start of this move in October, and you could get something similar, maybe not exactly the same, but you get a similar vertical move that can last into the fourth quarter. Then in 2022, right, we went into that, and that's where the liquidity engine kind of was turned off, the spigot was turned off, and QE wound down. And so we went from 2021 up into 2022, and then 2022 spent the whole time going down. At some point, I think that's what we're going to transition to. So I would argue from here in 2024, you might see both, right? You might see the blow off top, and then you'll get a scenario like 2022 where we go down for the rest of the year in 2025.
And also we have the 2007, 2008 move too, where we popped for 3 weeks, then sold off.
Mm-hmm.
So, all of them are valid. We ran up into this. So your scenario could be, Phil, that they give us 50 basis points. We get an initial rip higher in the markets, and then we get the classic Thursday sell-off. Or you said it disturbs the options expiration week, and we can stay high into Friday, maybe even into Monday, and the sell-off starts on Tuesday too. So, what we're really telling you guys is that none of us have any idea what's happening, but you have to be aware of the opportunities, and you just have to react to these. You could take your guesses, all right? But if you're going to take a guess, be light and then leverage into it. Don't try to be a hero here, or you can become a zero pretty fast.
Yeah. And so like day one, kind of the overreaction, and then day two is a reaction to day one. And then you have I think by the third day after the Fed announcement, you kind of get an idea of what's going on. So we're going to let that play out. Obviously, you guys are watching this a day after the rate announcement, but we're going to probably have a much better idea as we get into next week. And so we'll see where the chips lay there. Otherwise, guys, thanks for watching. If you need help navigating these markets, head over to tradegenius.co. We'd love to see you in the room with us. Bob, thanks a lot. We'll see you guys on the next podcast. Take care.
Trade Genius.